Good morning, traders. It is Wednesday, September the 11th. Taking a look at the charts, we're starting off with the UWM, which is really just the Russell 2000 Index ETF. It's the 2 times leverage. And what we're looking at here is more or less all the other indexes were looking overextended and looking like they were ready for a pause or pullback. I talked about it yesterday morning that the SP 500 looking ready for a pullback. But when we looked at the Russell 2000 later in the morning, I noticed it was turning green from this downtrend, this red bottoming type of formation, and it was ready to start a new rally going forward. And instead of the being overextended to the upside, it actually formed a bull flag. Now, if we just zoom into the price range here, let's just actually take a look at the current price. We'll just go to the daily chart first, and if we look at this type of price action right here, you can see we started to break this falling trend line. The market had a nice strong rally to the upside, and then it pulled back, and more or less it had consolidated in this range at that point for more or less 2.5 days. And if we go to the 30-minute chart, let's just go to the 30-minute chart and zoom out a little bit. Here is that price action of where it is. This is the falling trend line across here. This is where it started to break out. It had flagged sideways in a very bullish formation, breaking this previous pivot high and this other previous pivot high, meaning once this breaks two previous pivot highs, it means it's got pretty strong momentum to the upside. The first pause or pullback can be bought into. And if we do a Fibonacci extension, we can get an idea of where this target should go. So we can go from a couple different areas. More or less, let's just go from this one first. We go from this low to this rally and then to this pullback. We'll just carry that forward. And then we can go from another one, which would be this deeper, where it potentially started off even lower, and we go back up to this area and back down to the same pullback. And that'll give us a target of where we should expect to see more or less the rally go. So this is the 618. This was our conservative target. More or less price rallied up and traded through there all day or yesterday afternoon. If usually it flirts and consolidates at the 618, we usually see that 100% measured move filled. So let's just focus on that. So more or less our previous target was at 67.18, not knowing where the price was fully going to pull back. You can see in pre-market trading, it's trading at 67.18. So it is at our second target, but I did send out an alert this morning. We're moving our target up to 67.75. So just below this 100% measured mark, about 20 cents below it. Hoping to squeeze out another about almost another 1 more percent if we can hit this second move. So the fact that it hit 618 consolidated, it's starting to run up. We're not that far away from it hitting our target 2, which will be just over about a 5% gain in 2 trading sessions. So quick explosive moves, and we want to get in, get out, and get back to cash and stay nice and conservative with our money. The market is extremely wild. At any point, we could see some huge 2.5% sell-off. So we got to be very aggressive with getting out as it runs up to these resistance levels. Typically, you want to start to get out before it hits a resistance level. So for example, we're getting out about 20 cents or 15 cents below this 100% measured move. And you want to get out, and that's why we take our first target and our second target when it first gets up to these levels. Price could go higher, but each time it gets to a target, that is the first level where it could roll over and just tank. And so that's where we need to scale off our positions, move our stop up to break even. So if it does actually roll over there, you never know if it's going to go through it or roll over. You got to protect your money. And here's the second target. We're going to get out just before it. The reason you want to get out before is because if it does start to top and start to reverse and sell down, instead of unloading your position, taking profits when everyone keeps buying and pushing price higher, you get a nice fill price. As soon as everyone's in distribution mode, selling off and trying to get out, you are chasing a price lower and you're going to get a really bad fill, and always much worse than you anticipate. You could look at the chart selling off, you think, well, I would have got out up here, but reality is by the time you actually got your position and you probably got filled, it could be way down here, right back to where we were. So you want to try and get out as you're going up to resistance, not after you hit it, because after you hit it, price can collapse very quickly. So that's where we are with the IWM. All the other indexes yesterday actually were negative and red on the day. The Russell 2000 really took off and performed up 1.25%. It is trading up, outperforming today 3-1, up 0.4%. Hopefully, we'll see it pop up and we'll hit our second target, and then we'll look for a new trade setup. But overall, we're catching this move perfectly in terms of we picked the right sector, the one that was consolidating, that just changed trend, it had a nice tight bull flag, and that's where the upside target is now. Now let's go look at the rest of the markets here. Let's pull up the SP 500 real quick. SP 500 daily chart. You can see yesterday it sold down fairly substantially. Ended up recovering near the end of the day, and now it's in this consolidation. It more or less has kind of built up some energy here that it's been consolidating, and it's primed and ready for another potential pop going forward. Maybe that pop will be today. Overall, we're looking at 3,000 or 30.20 up here, this previous high area as the next resistance area. But again, we got into the small caps because they were looking more primed and ready. They hadn't had this initial breakout from this pattern. They haven't had the extension, and that's what we caught yesterday. We got in equivalent to like right here, and yesterday the Russell finally had that breakout, that clean breakout and extension move, and we'll see where it goes from there. Looking over at the dollar was sharply lower this morning. It is still down a 0.1%, but overall it's recovered. You can't see it on the UUP ETF, but it gapped way down, and now it's rallied back up. So we'll see where it goes. If it continues to rally and push up today, it could put a little bit of pressure on commodities. But overall, it is still holding up within its key uptrend. Looking over at the safe haven plays, take a look at bonds. Bonds continue to unwind and sell off. We called this perfectly. We got into bonds. We got out right near the top and then got out the rest at break even as it did roll over. We talked about if equities markets were to break to the upside, we're going to see all the safe havens flush out, and we've seen that. We've seen bonds flush out. If we go over to gold, you can see gold sold off the last 5 sessions. Silver, a really big pullback as well. And if we go over to the gold miners have sold off as well. So we've been playing the market really well, just hitting our 1 and 2 base hits each time and staying very conservative in terms of this market could have some wild price swings, and we don't really want to get caught on the wrong side. It's extremely headline driven at this point, and we're just letting the market do its thing. Overall, if we look over at miners, just to get an idea of the trend here, let me just pull over the trend analysis chart. More or less, you can see here we've gone from green to more or less it's gone to orange, which means it got momentum to the downside. It had a first move, a bear flag, second half of this move, and now it's going red, meaning it's pretty deep into a red trend. We'll see if it can get some traction. The daily chart does show a lot of damage being done here with this potential head and shoulders formation. You've got a shoulder, you've got a head, you've got a shoulder, and it's starting to break down, and that could continue down and break this low over here, which if it does, we'll probably see it come down to that 36, 34 area for a full flush out. At that point, we'd be looking for some type of bottoming formation and to potentially get long. Going over to energies, natural gas is really exploded to the upside. It broke through this resistance area. It held up for 2 days. Yesterday started to reverse. Today it's coming back down. Overall, we played this move. We got in somewhere right over here, and we played it right up into resistance, into this resistance, and we pulled our money off for about almost a 10% gain. And now we're getting that last final kind of exhaustion, I think, pop in price where it's going to go up, and we could see it come back down, and we could see some pretty big volatility. We will be looking to try and get back into this. This is a major resistance line going on the chart. If we were to actually go to the weekly, you can get a feel for how big this pattern is. Let's go and zoom out a little bit. You can see how significant this is. We can go back even further. It's a very significant pivot area in the market. It's more so in the last just couple of years. You can see it's tagged it, bounced. Obviously, once you break through it, it becomes resistance. You can see we've pushed up intra-week and we've sold back down below it. and we'll see where it goes. I do feel as though natural gas, it is seasonality wise, it's in favor. So I feel as though this is some type of bottoming formation. Maybe we see continue to try and put in some bottom bull flag here or something. But once it starts to break out, I think we'll be off to the races to 3 and potentially back up to the 4 area. But we got to let it do its thing. It is stuck under the most significant resistance line on the chart. So it's got a lot of work to do to get through there. Looking over at crude oil, up 1% today. This is the weekly chart. You can see it had a strong rally early 2019. It's been consolidating. A lot of wick action going on here. Small bodies, lots of upper and lower wicks. If we go to the daily chart, it is really just a mess. Not a fan of trading all this noise. It is drifting up. It's got potential to go back up to 61, maybe 62, but overall it is just a kind of a crapshoot at this point. And I have no interest in trading a chart that looks like that. At least not right now. Last but not least, let's pull up the chart of utilities. Now, utilities has been on fire. All of August, we saw stocks trade sideways or lower. Utility sector performed really well as a safe haven play. And you can see here, it looks like an exhaustion final pop in the price, and it's rotated back down. And as we know, something that goes straight up usually comes almost straight back down. And now it's sold off, and it's got to the point where it's showing kind of a reversal candle right here yesterday. So it sold off and got bought right back up to close near the highs of the day. If we go and look at our trend analysis chart, bars are green, meaning it is still in an uptrend. Momentum and the bias are buying, and you can see here we actually dipped into these lime green areas, indicating we got oversold, and we happen to be at the 20-day. So this could be an early warning sign that potentially the stock market is getting close to topping out, which means money's starting to rotate into these safe havens early. So we could start to see the safe havens firm up over the next, well, they look like it's starting to firm up as of yesterday. And that means we could start to see volatility in the stock market, pops and drops as we see the market start to top out. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.